Should financial services companies be allowed to treat people unfairly, to charge extortionate fees or interest rates? Is it paternalistic? Is it the nanny state for the government to regulate the behaviour of financial services providers? This is an argument that is sometimes put forward by the financial services industry. Consumers are adults and they can make their own decisions. They don't need the state to restrict the services available to them. I fundamentally disagree with this view. I think there's a plethora of evidence that financial companies will rip people off where they can. For me, this reflects a broader capitalist narrative that prioritises profit over people, resisting regulations designed to curb the exploitation of vulnerable consumers. It's in this context that S&U, a motor finance lender, has recently voiced concerns about what it perceives as paternalistic regulatory practices by the Financial Conduct Authority. Now, I'm not picking on S&U here. They may be a perfectly decent company for all I know, but their argument is representative of the kind of arguments put forward by the financial services industry. Financial services firms fear that stringent regulations undermine business autonomy and stifle innovation by imposing greater obligations to ensure products are appropriate and beneficial for consumers. New consumer duty rules came into effect in July 2023, and they marked a significant enhancement in the FCA's efforts to protect consumers. The new rules require financial firms to ensure that their products and services deliver good outcomes for consumers, not just in terms of value, but also in how these products are used. These are the specific requirements under this consumer duty. Support to consumers, understandable communications. Who could object to these? Finally, products that meet consumer needs and offer fair value. Again, this is a no-brainer. There should be absolutely no scope for financial services to offer unfair value, because we know if that's possible, there will be unscrupulous firms that do it. This shift towards a more consumer-focused approach is a direct response to the long history of financial misconduct that has often left consumers, particularly more vulnerable consumers with less financial literacy, at a severe disadvantage. Without robust oversight, the financial industry is prone to abuses similar to those that led to past financial crises. Here are some of the scandals and crises perpetrated by the financial services industry. This is quite a list of infractions, and these are only the most newsworthy ones. Perhaps the most significant was the 2008 financial collapse, fueled by irresponsible lending and opaque financial products. The 2008 crash is a stark reminder of what happens when profit is prioritised over people. Now, S&U argues that the new government should change this paternalistic mindset. It points out that both domestic and international funders are reluctant to invest in the UK because it's more severely regulated than its international counterparts. I can understand that from a business perspective this is a problem, but I would say that if the UK loses business because it's protecting consumers, that's not a bad thing. The idea that economic growth and profit are the only important thing is just so flawed. The company also tries to convince the new Labour government that it will help their growth plans to loosen the regulation. It particularly points to the benefit in what it calls specialist credit markets, those people with so-called non-standard credit requirements. Here we're talking about people with poor credit histories, irregular incomes or other financial challenges. These consumers typically struggle to access mainstream financial services and rely on non-standard lenders for credit. These non-standard products often include significantly higher interest rates and more flexible terms to accommodate the increased risk associated with lending to such consumers. Now, S&U may be right that companies such as them allow poorer people to get finance, for example, to buy a car. However, to ensure that these consumers are protected, that the products meet consumer needs, and that they offer fair value, To me, this seems absolutely essential. Call me paternalistic, but I think it's worth protecting more vulnerable consumers. In essence, while the financial services industry is arguing that these regulations limit consumer choice and business innovation, and they probably do, the reality is that such oversight is crucial to prevent the systematic exploitation of vulnerable populations. The debate isn't just about business freedom, it's about ensuring that the financial system is fair, transparent and accountable. For me, there's no debate about that. I hope you found this information useful. If you did, please consider liking and subscribing. I'd really appreciate that. Thanks for watching, and I'll see you next time.